Beef Market Update with Ann Wasko on RealAgriculture.com is brought to you by Haney Farms. Shaun Haney here with RealAgriculture.com for another episode of the Beef Market Update. And as always, we're joined by Ann Wasko of the Gateway Livestock Exchange. How are you doing today, Ann?
Hi, Shaun. I'm good. How are you doing this morning?
It's a foggy, snowy winter wonderland in Lethbridge this morning. How about in East End?
Well, there too. We're getting some light snow, but there isn't much on the ground here, so at least we'll have a bit of a whiter Christmas than we were thinking.
Well, speaking of fog, that's a good radio segue to the cattle market. We are in a fog, and we are not going to spend our time talking about the past. We're going to look forward, and I'm hoping you're going to tell us the future is bright. What should we, as we look forward here, knowing what we know about the current market situation, what should our outlook be?
Well, I think we know enough, certainly, to be able to say. And to look forward, we have to look back to a certain degree, but we need to focus our plans looking forward. But looking back, we know the cycle has peaked as far as price cycle and cattle cycle. So now, from a North American perspective, and this has been a little bit frustrating because certainly the U.S. cycle is moving faster through this pace, but we're following suit here in Canada. We know there's going to be more cattle, more beef, certainly more proteins all the way around as we head into this next phase of the cycle. So it doesn't take a rocket scientist to figure out that that's going to eventually mean, and it is meaning as the market tries to look forward, figure all these things out, the prices are going to be lower. So we might as well not look back. The market's not looking back, and that's what futures are trying to do in their own crazy, volatile, day-to-day way, but they're certainly trying to carve out what lies ahead for 2016.
From a price perspective, how does it compare to where we historically have been at this time of the year?
Well, that's an interesting point because actually here in Canada, it's just been in the last few weeks where year-over-year prices have actually dropped below a year ago. And that holds true for whether we're talking about fat cattle, feeder cattle, calves. Yeah, it's not been a last few months, but really up until that point in time, prices had still stayed above year-ago levels. Even though they'd turned down from their summer highs, they were still staying above where we were at this point in 2014. But today, they're all below a year ago, and that even holds true all the way through to the wholesale level. So the price that the packer is selling the beef for, our AAA and our AA cutouts, just in November, the first month, since back in 2013, where we've seen wholesale prices also under a year ago. There's only one category in our price regime that hasn't broken year-ago levels, and that's retail beef prices. StatsCan came out this. StatsCan came out this week with their October numbers, so that's the most recent we have, and they are a new all-time record high of $20.33 per kg nationally. So that's an all-time record. Compared to a year ago, that's 13% higher than where we would have been sitting in October of 2014. And I think media has been talking about higher food prices in 2016 here in Canada, largely a result of the weaker Canadian dollar, and I think beef prices fall into that category as well.
So, this is the time, when clearly cattle feeders right now are cloaked in red. When you hear situations where the retailer has the highest, very, very high prices that they're selling the product for, does that mean the market's working or there's something wrong?
It's frustrating, but it's pretty much typical for what happens. So if you were sitting in the retailer's chair all through 14 and the first half of 15, it was the opposite, where the cattle feeder carried the leverage and the margin, and now that's switched. And there's always this long lag time before retail prices reflect what's going on at the producer level. Frustratingly long, especially when cattle feeders and producers are seeing lower prices and negative margins, but it's pretty typical, Shaun.
Okay, so the one component of this value chain we haven't mentioned is the packing plant. Where is the middleman packer sitting from a profit loss scenario right now in this market?
Well, B&L's, hard to really nail down there. Just their straight wholesale price that they're selling beef for has just broken below year-ago levels. So just like cattle prices, wholesale prices in Canada stayed higher longer than their sister prices in the U.S. because of that Canadian dollar impact. There's lots of uncertainty. We haven't talked about cool yet on today's call. I don't know if we need to or not, simply because the uncertainty is still not knowing what's going to happen, and that goes right through to wholesale prices for the packer. Is there going to be impacts on U.S. beef coming north? What might they be? So again, we've got lots of uncertainty going on right there. Generally speaking, the packer, especially south of the border, has been certainly, on the profitable side, especially through the fall here, where cattle prices have really come off hard and fast.
So we got a very, very weak Canadian dollar right now, and I think everybody's sort of wondering how low can you go. We've talked last call about how the fact feeder cattle exports have basically been zero the second half of the year. Live cattle exports have been down. Is that going to change in 2016?
Well, the dollar's more an impact on the pricing, right? And still, when you look at our Canadian prices compared to the U.S. and the exchange rate we're sitting at, prices are still higher or under stronger basis level, a smaller spread between our two countries than normal. So if somebody's looking for a quick response to our dollar coming down by seeing higher cattle prices here, I don't think they're going to be pleased with the result, simply because we've already got prices here in Canada. And I know this sounds strange, but already got prices here in Canada trading relatively high vis-a-vis the same pricing in the U.S. So don't be looking for that impact. But having said that, going forward, where does the dollar go in 2016? How much down can happen? And a lot will depend on the whole global situation and the energy side of the markets when you start talking about the Canadian dollar.
Well, what we hope it doesn't happen is usually when everybody thinks that something's going down, it ends up going up. And that would be the ultimate worst case scenario for this market, is if we have a higher Canadian dollar.
Yeah, and I think when we talk about exchange rate, Shaun, the bigger picture, the bigger storyline is really the impact of the strong U.S. dollar on their dismal exports, right? And so that's what's caused a lot of the problem for 2015 in the U.S. with all the protein that hasn't been able to find those strong export markets like they saw in 2014. It's been due to the strong U.S. dollar. So that's probably a bigger storyline if you talk about exchange rates and really what's going on here in Canada.
Yeah, we've got a bit of we have so far. We've had a mild winter, so that from a cattle feeding perspective, that is a positive as well.
It's a positive as well. It's putting the pounds on faster, and it'll put the onus on getting these cattle moved out more quickly as we turn into the new year. And of course, that's been a problem all through the fall, is getting enough cattle moved out quick enough to stay out of heavyweight discounts and just putting more beef on the market. So especially in that U.S. Corn Belt area where they're still struggling with getting out from under those heavyweight cattle that really started back in September. So it's funny how long something can take to kind of clean up, if you will, and albeit good weather and great gains on these cattle is certainly going to help the cost side, but I think cattle feeders are going to really have to stay on the ball in regards to getting cattle moved out on schedule.
Way to go. You just turned my positive into a negative. Congratulations.
I didn't think that's just a stay on top of it story.
Okay, so you did mention cool. We got $1 billion. They were asking for, I think, upwards of $3 billion. They got $1 billion. We interviewed Kelvin interviewed John Maswell. They're very, very happy. It's non-appealable. U.S. has to buck up. This is a positive, right?
Oh, it's absolutely positive as far as the cool story is concerned and moving it forward. Now the markets, wearing my market analyst hat, the markets need some clarity in regards to what happens next. Whether it's local retailers here across Canada, whether it's producers and their impact on the beef or the pork prices. So we need some clarity as soon as possible in regards to what's going to happen. Are we going to see something in regards to a repeal of cool at the Senate level and then through Congress, or are we going to be looking at going down the retaliatory tariff route? So the sooner we know, the market will react better.
Okay, well, we're going to have to wrap up there, but we're going to talk very soon before Christmas and we're gonna get started again. Anne's Christmas wish list. What does Anne want for Christmas for 2016? So we're gonna do that next time.
Okay, and we'll leave the lumps of coal at home.
Perfect. I want nothing but good news next time we talk. That's the rule. I don't care how long you have to do your research. Only good news. No more bad news.
Okay. We'll work on it.
Have a good weekend, Ann.
Okay. Thanks, Shaun.